Hi, this is Dee with Brown Girls Invest Too. Last time I talked to you guys about investing in companies that pay dividends to provide a source of passive income for yourselves. This week, I want to talk to you about 7 companies in particular that pay me over $531 a month in passive income.
When someone chooses this as a strategy, they are eventually trying to generate enough income to live off of the dividend income that they receive.
This last year, there's been a big change in the stock market where money is moving out of growth companies or out of tech companies and into more value-driven, solid companies. Those solid companies pay dividends. September is actually a really good month to start dividend growth investing because September is the month of the year that investments generally don't perform their best, right? So if stocks have moved down, this is a good time to purchase them when they're down and then ride them up either for the time frame that you're going to stay in them or as long as you decide you want to hold that company. Before we get into the list of companies that we're going to talk about today, I want to tell you why a company would pay dividends in the first place. When companies earn money in the form of revenue, that portions of that revenue become profit. They can either decide to take some of that profit and reinvest it back into the company. They can do research and development in whatever field whatever industry they're in, or they can decide to pay you, the shareholder, as a reward just for owning the company. This is where we start to make our money. The companies on the list that I'm going to show you has actually decided to share their profits with you and I as the shareholders of their company. Most of the companies pay these dividends quarterly, but some actually will pay monthly. When you know that you have steady income like this coming in, you can pick companies that pay in particular months so that you're being paid every month, which is how I determined that $531 is what I received from the companies that I'm going to share with you today.
As I said, with those profits, they have a few options. They can reinvest in the business, acquire other companies, or reward the shareholders.
I chose these companies because they are solid companies, but also to show you that they're companies you're familiar with. You actually may use their products quite often. I invest in mostly conservative blue chip companies that are entrenched in society, and I know there's very little chance of these companies going away. I will say that they are not high flyers, but they are steady payers.
It's like getting free money.
As always, I am not a financial planner or an advisor. Do your own due diligence, and let's get into this.
Take the time to like and subscribe to my channel, and let's get into the good stuff. First on our list is Procter & Gamble, ticker symbol PG. I am constantly telling people that I can walk through their house and point out a ton of Procter & Gamble products. Products like Tide, Gain, Secret Deodorant, Always Feminine products, Pampers, shampoo, and shaving products all through your house. One share of Procter & Gamble trades at about $154. Procter & Gamble pays a dividend of $3.76 per share for the year, which turns out to be a yield of 2.44%, and that pays me $223 every quarter. Analysts rate Procter & Gamble as a buy with an average target price of $155, which is slightly above the current price. Now, what's appealing about Procter & Gamble is how diversified it is. This company has been around since 1837. That's 186 years. It's not going anywhere. Procter & Gamble is a dividend king. Dividend kings, that means that a company has been not only paying a dividend, but increasing their dividend for over 50 years. In this case, Procter & Gamble has been paying out and increasing their dividend for the past 67 years. It might make a stable dividend stock in your own portfolio. Let's move on to number 2, Johnson & Johnson. Again, this is a household name, and for good reasons. Again, all through your house, Johnson & Johnson baby products, Listerine, Tylenol, Sudafed, Stay Free and Carefree feminine products, and Band-Aid products. Johnson & Johnson pays a 2.96 dividend yield, which is about $4.76 per share every year. Johnson & Johnson adds $997.38 for the year, which turns out to be about $249 per quarter. What's fantastic about Johnson & Johnson is that they offer products that people will always need, whether the economy is up or down. Johnson & Johnson is also a dividend king, meaning that, again, they've been not only paying out dividends, but they've been increasing their dividends for the past 50 years. Now, talk about real commitment. This is a 137-year-old company that has been growing their dividend for the past 61 years. This is a strong track record. They have great cash reserves on hand, and they're a safe bet in any market. Now, let's talk about a company we all know and love, Home Depot. I've given quite a bit of money to this company over the years. Home Depot's ticker symbol is HD. Now, these folks are the kings of home improvement. Their closest competitor is Lowe's, and in terms of market cap, Lowe's is pretty far behind Home Depot. They're paying out an $8.36 dividend per share for the year, which equals around 2.54% yield. Home Depot adds $1,445 in passive dividend income for me for the year, and that provides $361.25 per quarter. Home Depot has consistently outperformed the S&P 500. With a shortage of homes being built, there's a lot of room for Home Depot to grow as people invest in remodeling their current homes. They've got a virtual monopoly on the home improvement sector because most of their business actually comes from commercial sales. So again, in my opinion, this one is here to stay. Next up, stock number 4 is AbbVie, ticker symbol ABBV. AbbVie is a biopharmaceutical superstar. It's actually a shoot-off of the company Abbott Laboratories. AbbVie is one of my biggest dividend payers, and they are a dividend king. Ticker symbol ABBV. They've got a dividend yield of 3.97%, which translates to around $5.92 per share for every year that you hold on to them. You've probably seen ads for their hit drug Humira, which is a beast in the medical world. AbbVie is sitting pretty with some fantastic patents on various drugs, and they're pouring money into research and development every year. So they're not a one-hit wonder. One thing to watch out for, though, is they're losing their exclusive rights to Humira in late 2023, but they have other drugs sitting on the bench that they have exclusive rights to sell. AbbVie provides for me $1,076.44 in annual income. That translates into $269.11 per quarter. Keep an eye out on this medical marvel and consider adding it to your portfolio. Stock number 5, JPMorgan Chase. This is a big player in the financial industry. JPMorgan Chase, ticker symbol JPM. They are one of the major players in the financial world, and they are gobbling up regional banks that have recently failed. Right now, they're paying out a 2.78% dividend yield. So for every share of JP Morgan that you own, you're looking at about $4 annually in your pocket. They pay me $382.48 for the year. That's about $95.62 every quarter. That's not too bad, right? What I really like about them is that they have a ton of cash on hand, over $1.7 trillion in liquid assets. That's like having a money fortress. One other thing I like is that they are run by the very smart Jamie Dimon. They are a big bank that is too big to fail, so they aren't going anywhere either, in my opinion. Stock number 6, PepsiCo. Now, who doesn't know PepsiCo? Ticker symbol PEP, another dividend king. They aren't just selling soft drinks, Gatorade, and all of those tasty Frito-Lay snacks. They also have Quaker Oats, Yum Brands, and many others. Their dividend is at $4.83 per share, meaning you'll get about $1.20 every quarter for each share that you own. That's a 2.82% dividend yield, which is on par with our buddy JPMorgan Chase. As I said, what's great about PepsiCo is their diversified product lineup. They've got their fingers in many things, which bodes well for growth opportunities. For me, they pay me $645.99 for the year, which turns out to be about $161.49 per quarter. With a brand like Pepsi, they're sticking around for a very long time. Now, we've talked about all of these individual companies. I do own ETFs. For those of you that do not want to do the research on individual companies, an ETF may be the right fit for you. I want to give you an ETF that is basically a basket of top performing stocks. So that brings us to last but not least, Schwab U.S. Dividend ETF. Its ticker symbol SCHD. It's an exchange traded fund that focuses on high dividend paying companies. One share of SCHD is currently priced at $73.67. SCHD boasts a dividend yield of 3.61%. It pays me $562.26 annually, which turns out to be $140.56 for the quarter. This ETF holds companies like Broadcom, Cisco Systems, Amgen, some of the companies that I already mentioned here earlier, Home Depot, AbbVie, PepsiCo's on the list as well. There are other companies within this ETF. I'm only showing you the top 10 holdings in that ETF. It's a passive investment providing diversification and income, and it has a low expense ratio of 0.06%. Now, I've given you 6 stocks and 1 bonus ETF to consider adding into your portfolio. There are other companies out here that maybe aren't a dividend king or a dividend aristocrat, but they may pay dividends anyway. Companies like McDonald's or Apple are really good examples. I often see people, have all of these Apple products and maybe they don't own any Apple shares. Apple is a company that is appreciating very well as it grows, that company, but they also pay a decent dividend. That's a bonus. That's free money. Consider companies like McDonald's. You run into this, you're out and about, your kids want some French fries, you want a Big Mac, whatever. Those companies like that, they appreciate in value and they pay dividends. So consider those as well. McDonald's is a dividend aristocrat, meaning it's been growing its dividend over the past 25 years. So I originally said that I would be earning $531 on average per month in dividends. What this chart is actually showing us is that apparently one of these companies in here, it's calculating the increase in dividends that they will be paying next year because it's forecasting the dividends into August of 2024. This is actually another good example to show you that without me doing anything, I will get a raise. This is how you build your income. This is how you build your wealth over time. Again, some months will be higher than others, and again, that is what you see here. It looks a little unbalanced, but it's only because of the companies that I pulled out of my portfolio. I actually have a much more balanced income coming in. I just didn't pull those particular companies out that actually pay in October, January, April, and July. Anyway, with the companies that I've mentioned, it pays me out an annual income of $6,627.91. This month, I'll get $1,000.68, and I welcome every penny. So there you have it, folks. 7 fantastic dividend stocks and an ETF bonus to consider for your own portfolio. Now remember, dividends are simply gifts that keep growing and keep giving to you over time. I hope you enjoyed this. Do me a favor, like and subscribe to the channel. Leave me some comments. Let me know, do you have any dividend paying stocks? And if you do, what kind of dividends are you receiving? Are you tracking it? And are you trying to grow those dividends? Let me know. Keep investing. Have a great one.